What's up guys, welcome back to my weekly trading reflection week 19, and in today's video, as usual, I'll go over my whole trading week. I did not trade this week on like a challenge. I paper traded because I was on vacation and I just want to focus on just getting better and better and better, getting experience, getting conviction in my setups, and just seeing where my concepts work, why they work, etc, etc. So that's what I'm gonna do like every week, or also right now. And at the end, for the ones that stay, I'm just going to be dropping some gems, some important lessons I learned that are very important. So important lessons that are very important. Okay, sorry. Also, my head is just fucked. I know as you guys have realized, but I went to the barber there in Spain, and I don't know what they did, but they didn't really understand what I meant with what I want to do with my hair. But I'm over it. It will grow. It's just way too short. I don't know what they did here. They made like a circle. It's fucked, but yeah, I'm over it. So let's just get to the charts. So first of all, on Monday, what did we get from price action? So we were here starting on Monday. This was the whole week of the price action. So we basically dumped, took out the low, and then we retraced back to OTE of this whole range. So on Monday, it was a no news Monday. So you need to realize then, okay, it's low probability, don't really force any trades there, but there was a nice SMT at the highs right here. So this was the SMT. As you can see, on Monday we end up taking out the high on the Dow Jones, but we don't do this on NQ and ES. So afterwards a dump happened in the PM session. I don't know if I could have profited anything from here, because there only was like an SMT, and on the higher time frame there was really not anything interesting, because we were just at all-time highs, right? So on the PM session, this may be the only opportunity we could have gotten. This was London on Monday, sorry, this was New York on Monday, this was PM on Monday. And after we saw this dump and this SMT, a big range SMT, right? This is a high that's formed on New York. This is a high that's formed on New York PM session. So that's a nice big SMT, right? The bigger SMTs, they work better from what I've seen. So after we see this break of structure, we could have seen, okay, this is maybe the original consolidation. We're going for the lows. And so on the 1 minute time frame, if we take a look, we end up getting back inside this. Let's say this was a 50-minute breaker. I don't know what it was, but it was a nice breaker, and we end up tapping into it inside this fair value gap also. And so yeah, you could have just seen that this is low resistant liquidity, and then we break a low right here, or if you want to be more confident, here, and then yeah, we just retrace back to equilibrium of this range, and then you could have had your entry right there. Right, this is the only opportunity I maybe could have seen on Monday, and then target the lows or way lower, whatever you want. But this was a nice play maybe on Monday. Now you could have entered here after disrespecting this fair value gap, and we have this clean low. We are not inside equilibrium of this range. So we expect, okay, the price needs to come down at least to like OTE or something. We did reprice back to equilibrium, but we don't have any manipulation whatsoever. So you could have expected, okay, big range SMT here. So this plays through a fair value gap. We completely disrespect this. So yeah, you can just enter here with your stop at the SMT high, and then target the original consolidation also, but not really clean trades. If you look at the quarterly theory, you see that on New York session, it was actually nice. This is an X because it's the continuation of the previous quarter. Then we have an accumulation, a manipulation, and a distribution, right? But we're just like at all-time high. So it's really low probable conditions, but you see time working out perfectly here. Also here, what we do here is we start with an accumulation, a manipulation, a distribution, and yeah, a reversal continuation. You see on PM session, quarterly theory, I don't like to use quarterly theory here. That's where I use like the micro cycle. So if we go back to price, this is the only time I said maybe this is a nice entry, and just look at this, look at the microcycles, we end up just creating a nice accumulation here. We don't use the first third to define the Q1. So you see then, yeah, we have accumulation, manipulation, because, I mean, we go below high, go above the true micro session open, and now we should distribute lower. So yeah, this is just beautiful. Time and price aligns because we know the draw is lower because we have a sequential SMT. We just want to go lower back to the equilibrium of this range. And yeah, this just looks clean. Now on ES, I don't know what ES was doing at this time. Let me take a look. But I think it was a nice manipulation. Yeah, so this is actually the reason why, okay, we could have known that the draw is lower from here. Just because, look at this, we have a nice accumulation. We have a big move up, everyone wanted to long, and then just we completely disrespect this, and this becomes basically just the manipulation, right, for then us to distribute lower. So on the higher time frame, let's say the hour 1 time frame on ES, you can see that this is just a beautiful AMD, right? And so what could we expect after we confirmed this AMD? That, okay, we're still bullish on the higher time frame on ES, so what can we expect? We don't want to target the lows because why would we do so? But we know that price can eventually rebalance to equilibrium. So that's what it did, right? It rebalanced to equilibrium, and basically this was the higher time frame sell model of this week. So if you just play price further, let me just delete the replay. You can see that this is where we end up taking, this is where smart money ends up taking profits at the lows for this week. This was the low of the week. It was formed on Tuesday. And so this was actually the whole sell model, right? This was the sell model of early this week. And we could have known that because of the SMT, because NQ was the only one that didn't take out the high, but on ES and on the Dow, it was clean that we had an AMD, right? And what can we expect? Price going back to equilibrium. This is a nice original consolidation. Why not here? Because we're still bullish, right? We need to spot the model, and in this case, on the 1 hour time frame, I don't know, this looks like a clean model to take profits here, especially because we know markets move from equilibrium to liquidity, to equilibrium to fair value gaps liquidity. And this was just nice sell side, and this doesn't make sense because we are not really bearish at the moment, right? If we were below here, then yeah, maybe our buyers might be switching because then we're really, really bearish. But you see, we just sweep it and just look at the body's close. We close above the wicks, meaning that we just want to go higher still, right? So yeah, that was Monday. Only opportunity on NQ was, I don't know, spotting this SMT, spotting the, let me take a look on the 15-minute time frame, spotting the breaker. This was the only entry to go lower maybe. And yeah, on Tuesday we had CPI. So on those red folder news dates, you can expect like the high or low of the week. So that's exactly what happened on Tuesday. This is CPI. This is the move that CPI created. And yeah, on Tuesday, we end up forming the low of the week. So again, this is so important. I really can't trade anything without SMT anymore. SMT is just everywhere. You see what happens when we open up on CPI on Tuesday. Let me just delete this. Just look at this. This is just beautiful. We have NQ right here, open up CPI, stopping out the early shorters, and then just dumping like a lot of points. On S&P, what do? We also do that, but on the Dow, so on the US 30, so I like to use the 3 pairs now because you can spot more SMTs right there, and SMT is just so important. If you look at the 5-minute time frame, let me take a look. You see here, we never take out this high. This is a lower high than this one, but we do it on NQ and ES. So this indicates, oh, okay, SMT, so we might reverse here. The draw is lower, right? Because this was the original consolidation of the sell model that was initiated after this AMD, and just respecting of this breaker block, we can expect price to go equilibrium, complete the sell model. And so this is what happened on CPI, right? We completed the sell model, took out the lows, the original consolidation of this bigger time frame sell model. And so this was a clear AMD on CPI as well. If we take a look at the quarterly theory, you can see we opened the New York session with an accumulation. We manipulate above the true session open, sweeping the highs, and then we go lower, right? Distribution higher again, and then a reversal. So really clean with quarterly theory. I don't use anything without quarterly theory because it just tells me exactly when to trade, when to avoid if it's not clear. After CPI dumped us, we can use the big fair value gaps to take trades off, right? If we have a bearish fair value gap, you just want to short there, right? If you have a nice model presenting itself. And we had that on NASDAQ. We had price retracing back to equilibrium of this range. Let me take a look on... Yes. So CPI told us, okay, we're bearish, we're going for the lows. We took out the lows. We end up respecting this fair value gap. And so after price retrace back to equilibrium, what can we expect? Just go back to sell side, right? And that's what happened. So this was a nice setup on Tuesday. What do we see here? Again, SMT, lower high, higher high, higher high, lower high. And then, we break structure with this low right here. And then, I don't know, you just market enter right there. This was clean liquidity, just low. You can expect this to get taken out because it's low resistance liquidity. So the only thing I need is actually just a sell model, which was presented right here, and knowing that price moves from equilibrium to liquidity. So we go back to equilibrium, fill this fair value gap, we expect price to go lower. SMT confirms the price reversal, right? If we didn't have a displacement down, then we can just target lower. So then that was Tuesday. On Wednesday, we had this. We had just for the rest of the week. So we took out this low on NQ and then yes, and then we formed a low on Tuesday on CPI on red folder news. We can expect a higher low of the week, and then we just literally went up and filled this whole range of imbalances, going back to OT, and then at the end of the week we sold off again. But this was on Wednesday. So if you take a look on Wednesday, okay, what we can expect, okay, we swept this low, bullish. We don't want to be bearish if we're still, really strong on price, right? So what can we expect? Price moves from equilibrium to fair value gaps to liquidity. Here we have this low, this high. Price ends up in New York session on Wednesday, just going back to OTE. We sweep the low, displacement. This can be your entry, target the highs or even higher. I don't know, but I didn't trade this because there was no SMT, and I really need SMT now. But if you align this to quarterly theory again, you can see that here on the New York session we had a clear XAM. The distribution to bring us back to equilibrium of this range. Then we start a new session. The PM session is this one, and so this first one is the first quarter, so from 12 to 1:30. So why there's a lot of people they get stopped out here because they see, okay, there's a bounce from equilibrium. Let me just take a look on the even lower time frame. Look at this. Why do people get stopped out early? Look at this. It's because they don't wait for time and price to align. Do you really think that after just this little sweep, we go up again after tapping equilibrium? There is maybe displacement, but you need to understand that we need time and price to align, and we're just at the end of the New York session. And also, yeah, the quarterly theory, it doesn't align. We don't have enough structure. You see that the best setups, they form when we just accumulate a little bit and then sweep a low, then time and price aligns, because you need to wait for this distribution quarter of the New York session to end. And then after the distribution quarter of the New York session, which brought us lower, ends and everyone got chopped up right here, we now have a lot of highs to target, right? We have a high here, we have a high here, and we have highs all over here. We can expect this because there's no clean manipulation. Price shouldn't go lower from here. We just rebalance to equilibrium. Then we create structure, we end the distribution quarter somewhere right here, and then we start the PM session. We see a sweep of the low once again. Then we are finally ready, right? You can target, you can enter on the 5 minutes for vertical gap here, and that's when we actually go higher. We need to wait for structure and time to align, and never trade the first bounce. We at least need to wait for like everything to settle, right? And it will be so damn clear when everything is ready. You don't tell me that this is clean. This is not clean. What do we see here? A little sweep, rebalance to this for value gap. No really strength, no quarterly theory alignment, because we are still just at the end of the distribution, which brought us lower. We want to wait for, okay, what does price wants to do in the new session. And so yeah, it ended up sweeping the low, going up. So that's just what I want to make clear. That was Wednesday, not really a nice opportunity. Let's take a look on Thursday. This was maybe an opportunity. We still want to go higher, so take a look. We still want to go higher. We still want to go higher because, there's no reason to short if you still respect equilibrium. And we had formed a nice SMT right here, because on another pair on the Dow or NES, we failed to take out this low. We respect this beautiful 50 minutes for value gap. We chop here again. You see, we need some consolidation before we actually go, right? Before everything is ready. And so on the 1 minute time frame on Thursday, what do we see here? We respect this. We have a stop rate. We go up. Okay, we can expect this to be the buy model, right? It's really clean. All these highs to be targeted. We are bullish. We are still bullish, so no need to be short biased. I took some longs right here. This is the last one of the three that ended up working. Why was this not a good setup? Let me just delete this one and this one first. Why was this not good? I recognized my mistake. It was not an equilibrium of this range. So that's the first one. Bad trade. We always want to wait for equilibrium. Then the second one, let me take a look. This was nicer because here we end up retracing back to equilibrium and we have an SMT. But we don't have... this was a nice trade. I can't just say some problems over and over again because this was a nice trade. I just entered here, but after seeing weakness after this high got stopped out, after seeing this displacement down, I should have closed here at break even. And then afterwards, you see everything just starts to align because then this becomes the best setup, which just ends up on my paper account, of course, eating up all the losses and still making like a 3 or 4 R on the day, right? Because I used good risk management, and here we actually have a lot of highs here, and I think the quarterly theory also aligned here, right? You see, it's so beautiful actually. You need to wait for time and price to align. You see what we do here on the PM session, okay? An X, a continuation, an A, an M. And so you can only look for shorts in the manipulation or distribution. And so this is the only time you look for shorts. I got chopped up right here because quarterly theory didn't align. I was not aligning the microcycles with the 90-minute cycles. And looking back at it, I should, right? This is where the best setups will present themselves. Because what do we have right here now? We have double SMT, price retracing back to equilibrium. We have this high, these equal highs right here to be targeted. Super clear draw on liquidity. We have a nice buy model that we can attach to it, right? This is so beautiful. We also dip below the true micro session open. We are below the true open. We are above it. Below the true opens, if you're bullish, is nice. You can enter longs here. We sweep the low. Then after seeing this 1 minute for early gap getting respected, after seeing the manipulation quarter sweeping the low, I just market enter right there and put my TP at a nice clean high that I was expecting to get taken out because, I mean, price moves from liquidity to liquidity. So that was beautiful run. You see, when everything is ready, we don't hesitate. We just straight up pump to where we need to go. And this was too early because price and time haven't aligned. Why have price and time aligned here? Because we stack up a lot of highs. We have a lot more consolidation. We have a lot more confluences. And we are actually entering inside the manipulation quarter of the 90-minute cycles, right? And even you align this with the micro cycles. This is the manipulation quarter, right? This is the green manipulation quarter. We sweep below, but we also can align the micro cycles with it to give even extra conviction. And what do we do here? We have a nice accumulation, manipulation, distribution, reversal, continuation. Super beautiful. Everything aligns, dump clear. These are the setups you want to take. And you need to be patient for them because they don't happen every minute of the day, right? So that was Thursday, and on Friday we really didn't have anything. It was just boring. I'm not gonna look at that because for me there was nothing to do. But we end up dumping. I was kind of expecting us to sweep this low and then go higher, but we just decided to go respect this fair value gap and eventually go lower on the 1 hour time frame. So this just tells me that, okay, maybe we are done retracing back to OTE and we just go towards the lows and this sell model can start, right? But I don't trade, I don't swing trade. I just need to look at the session, what's happening, and then I can take trading decisions. But that's my bias, a little bit bearish going into next week. But nevertheless, for the ones that stick with me towards my talking, now I'm gonna be dropping my lessons from this week. So I have everything written down right here. So let's go over them. This is just a combination of just random thoughts I just write down whenever I have some aha moment. I just write them down in my notes, in my notes book on my phone or wherever, and then I just make a nice summary of them. Also, I learned a lot from Justin Werlein, and they are my two mentors. Make sure to follow them on Twitter. They're just G's. They just they just help me out so much. So yeah, let's begin. Lessons from this week, February 12 to 16. SMT validates everything. I realized that I can't do anything without having an SMT. I need an SMT. Why? Because SMT is just way too powerful. Whenever there is a price reversal, there is usually, mostly, almost every time an SMT. Just go look back at your charts. Whenever there's a price reversal, there is almost an SMT. And so why wouldn't you use it if it's so strong? So that's just the key thing I realized this week. I'm not going to do anything without having an SMT. Because SMT validates everything. Why does a fair value gap work? Why does an order block work? Why does anything work? It's because SMT validated it. If we have an SMT, quarterly theory aligns, we have a market maker model, we displace. Why does that fair value gap hold? Because there is an SMT. Because smart money, they hinted to you that we are going to reverse, right? Now, second thing is big range SMTs between quarters. So, quarterly theory, whenever we have like a big range SMT, so it's like one high and another high, or one low and another low, between those two closely quarters, so Q1 and Q2, Q2 and Q3, Q3 and Q4, Q4 or Q1, if you have an SMT between those, it's really, really strong. There's usually like a big range SMT, and yeah, the best setups, they actually form when we have an SMT between two quarters on the higher time frame cycle, but also SMT internal on the lower time frame cycle. So SMT just validates everything. I'm just in love with SMTs. It's just the best thing ever, because I kind of neglected it. First time I thought just SMT is just a regular RSI divergence, is the same. No, it's not. SMT is really, really strong, and you need to realize it. It's just literally what validates everything. And bigger range SMTs is of course stronger than lower range SMTs. Like a 1 minute SMT is not really important if there's no like a big range SMT that's really indicating, okay, we're gonna reverse here, right? So I am gonna use 3 pairs for this. So I'm gonna use NQES and the Dow. I didn't use the Dow earlier because I thought, it's just another pair, I'm not gonna use it. But SMT is everything, and I need to check the Dow for it too, then of course, because the Dow should move the same as NQ and ES, and if it doesn't, then you see there's an SMT, right? That can indicate a price reversal. So I'm always gonna check for the bigger time frame SMTs with the Dow, because I see it work a lot. Whenever Dow takes out the high and NQ and ES it didn't, then you usually see price reverse, right? And so going on to the next thing, bodies is everything. I don't just mean, like I said earlier in my previous videos, with you need to look at the body close and bodies tell the narrative and wicks do the damage. That's still true. It's a very important concept. But in this kind of reflection video, I kind of mean more with like SMTs, because usually everyone spots SMTs with the wicks with it, right? But SMTs can also happen if you just look at the bodies only, right? You might see that price swept the low on both pairs, but if you take away the wicks and then you see that the bodies are actually forming an SMT, that's actually a hidden SMT, and you usually see price reverse when that happens. So the bodies do everything. You need to look at the body close. It's so strong. It tells you everything about where the market wants to go. And so don't just skip this gem, because it's actually something I shouldn't tell. But okay, why markets move is the core. This is just what I need to look for every time I open the charts. There's 4 things why the markets move. It should be a base of every setup I have. Markets move because of 4 reasons. The first one being markets move to hunt liquidity, buy side or sell side. Second thing, markets move to equilibrium of the range, or markets move, third thing, markets move to fair value gaps, so inefficiencies, or markets move to engineer liquidity. The markets do this. It's so clear once I just realized this. They always do these 4 things. They engineer liquidity, so engineer sell side or buy side liquidity. Then it takes it out because price moves from liquidity to liquidity, right? Or it just retraces back to equilibrium after a big range, or it retraces back to fair value gaps. That's the only thing that markets do if you look at it. So using these kind of things with your setup, you build more conviction, right? Because why do you take the setup? Well, because price retraces back to equilibrium, it filled a fair value gap, it engineered liquidity above. So after seeing a manipulation and displacement, okay, I can expect price to move up because I used these things why the markets move, right? It's so important, and it makes so much sense to me, at least. So yeah, that's that. I need this in my trading system before I do anything. Now backtesting, just want to go quickly over it. I realized that maybe I already stressed this a lot of times, but I realized that backtesting is just looking back at your old data, looking back at the week and just checking, okay, did my concepts work? It's the exact thing I did in this whole video. I just literally built more experience, built more conviction by looking for my trading system to work out in the market, right? So that's that about backtesting. I like backtesting using just the previous week's data or old data and seeing if it works, rather than just replaying a chart and just checking, oh, this checked, check, and then playing price further. And then, I don't know, it makes more sense to me to just go back to your chart and see where the concepts work instead of using a backtesting tool and using the replay feature. But that's just my opinion. Now, next up, quarterly theory tells you when we're ready. You've seen it in this video. Whenever I took a loss, it's mostly because I neglected quarterly theory. It was not ready. We were not in the manipulation quarter, and you should realize that we can only trade during the manipulation and distribution quarter. And you should wait for that. Wait for structure to build up and time to align, right? So then same setup, different conviction. So let's say 2 people take the same setup. one guy can still gamble and the one can take a good trade. Why is that? Why do two people with the same exact trade, same exact setup, why does one gamble and why did one have a good trade? It's because the one that gambled, he didn't see it enough times. He didn't have conviction with what he traded. He just entered the trade. The other guy, he's seen that setup over and over and over again, and he built conviction, he built confidence with that setup. And so that's why conviction and experience is so important, because you can't just gamble. You can't just think, oh, I think price moves up. No, you have to see it over and over again. And when you haven't seen it over and over again, what you should do is see it over and over again and don't trade it. Just see it over and over again and build confidence with it, paper trade it. And then if you then take a trade on a challenge or on your personal account, then it's a good trade because you've seen it over and over again without taking a trade. You've built conviction with it, paper traded it. Then it's a good trade after you take a trade on a live account or on a personal account, right? Because then you actually are a trader. You're not a gambler, right? Because why would you trade something that you haven't seen over and over again work? That's literally gambling, right? A professional trader trades their setup because he's seen it over and over again, right? He's seen that model over and over again work. So that's just something I want to tell. It's really nice concepts I learned this week from Justin. It's really, really nice. I write these things down because it's so nice to hear, and it makes sense. And I just want to tell it to you guys. So don't focus on opportunity, focus on habits. If you just end up looking at the charts all day and look for opportunity, then you're just going to end up taking bad setups, and you should focus on habits and just stepping away when you realize that, okay, there's really nothing happening today. You should just trade a few times a week. You should not trade every day. Just focus on your habits. Just focus on building discipline, not just looking at the charts and, oh, this opportunity I missed. No. You didn't miss anything. You had a good habit of staying away because you recognized that you were not in a good mood, blah, 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 blah. You get what I mean, right? Then only increase risk in good conditions. Maybe you should have a static risk. That's what I'm going to do. But when you're actually a professional trader, you should actually, when you're confident with trading your system, you should increase risk when you have good market conditions, right? If there's bad market conditions, you should lower your size then. And when are there bad market conditions? Well, when the market doesn't look ready, when price and time haven't aligned, there's not enough structure to validate what is the bigger time frame model, right? You didn't have recognized the bigger time frame model. There's no clear draw on liquidity. So how can you recognize, in summary, the market conditions? This is something really important. I noted down from Justin. How can you recognize it? First of all, red folder news. If there's red folder news, there's good conditions because there's something that drives the market, right? On a bank holiday, on no folder days, no news days, not a good time to trade, right? Then where are we in the charts? Is there a clear model and draw on liquidity? If there is, that's an A+ setup. If not, you can expect choppy price action. So if you don't know where the market is going and there is no clear draw on liquidity and clear model to recognize, we're going to chop. Simply as that. So you should recognize the draw on liquidity. You should recognize the bigger time frame. That's when the best setups are present, and that's when you can have a normal risk, right? Because that's when you have good market conditions. Now, another thing that can help you validate the recognize good or bad market conditions is, are we at all-time highs? If we are, low probability. If we are not and we have more structure, we are just lower, then we have better market conditions, right? Then are we at equilibrium? Remember, we only want to trade after price went back to equilibrium, manipulated there, because if we are longing at the top and shorting at the bottom, that's not good, right? So then, did we just pump dump 300 points in the overnight session or in the previous session or in the previous quarter? So again, I already talked about this, but if you have a big move in the previous session, quarter, then don't trade the current quarter or session and wait for the next one. Wait for structure to form, wait for everything to loosen up a bit, and then you should have a clear eye for where the market is going likely to go next, right? So then I listed all these things. It's a really nice list to recognize market conditions, news, where are we, where's the draw liquidity, where's the bigger time frame model, or at all-time highs, or at equilibrium. They would just pump the previous quarter or session. But a lot of it is, of course, experience. Just wait for it to be dumb, clear, and ready to go, right? Wait for everything to align. Scaling is only to maximize your wins. So I'm not going to do this, I think, a lot, because I'm still in the learning phase, still building my conviction. This is really for the professionals. If you are in a winning trade and you see another entry, then you can move your stop loss to break even, have another entry, and basically risk the same thing, but you can end up making more. Really, really nice, but yeah, it's a little bit too much for me, I guess. But this is definitely something where I want to go, right? You want to increase your winners and have really small losses, right? Then displacement needs to be through a low with multiple candles. Displacement can be recognized by price disrespecting the opposing PDRAs, price breaking strongly above a high or low, close to its wick. And actually, for a really good displacement, you also want to see multiple candles breaking below the low or a high above the high, right? Because whenever you have maybe a displacement candle below a low, if you're short, the next candle can just pump up again, right? So you want to wait for a little bit more structure, indicating that, okay, the next candle is actually also open and close below that low. So now we can look for shorts, right? It's not a clear manipulation anymore. It's really just a displacement and a move lower, right? So experience, everything makes sense, right? Just want to make it clear. Standard deviations. Actually, I should write it like this. Standard deviations are not used to base trades off. It's just a projection for exits, not used for entries. Not something I have a problem with, but something that Justin mentioned that I wanted to write down because it makes sense. You should just only use standard deviation from the manipulation low to the high or from the high to the low. Then you can see where you can exit, and it needs to align with like a PDRA or a high or a low. So it makes sense, right? The main point is, let's say you were in a long and the price hit the 4 standard deviation, and then you just short at the 4 standard deviation. That doesn't make sense. You can't enter right there. It's just only used for exits, right? Now the X used as a continuation of the previous accumulation works, right? So whenever we have the first quarter to be a continuation, an accumulation, but this is actually the same thing what happened in the previous quarter, then this is not, then this Q1 is not an accumulation. It's most likely a continuation. And so then we have the manipulation, maybe higher, and then distribution lower. So this really helps realizing that a continuation can also be an accumulation. Maybe you guys didn't know, now you do, but it really helped me at least. So then we're almost done. So never trade the first bounce, wait for gut structure to build up. Again, let's say you want a long from equilibrium of this range, like this, but price just only dipped like this. You don't want to long the first bounce, right? You want to wait for structure to develop itself, create some clean swing highs, and then once we sweep this, have an SMT, maybe another stop rate, then you see everything is ready, right? We have highs, depth inside the fair value gap, equilibrium, stop rate, SMT, internal stop rate, then we are actually ready, right? So you never want to trade the first bounce for good setups, right? You want to wait for structure to develop itself. So yeah, that's that. Don't just trade all the cycles, let it fit in with you. What I mean with this is that I shouldn't use like the true week open, true month open. I'm not that kind of a trader yet. Maybe I will trade more swings later, but at this point in my journey, I like scalping, I like intraday trading. I just like trading the session because I only trade one session, one pair, right? New York and Q. But that also means that I just should focus on the 90-minute cycles or the micro cycles and an hourly POI and the 5-minute time frame and the 1-minute time frame, nothing else, right? maybe, yeah, I look at all the time frames, but I should really just stick to my time frames and not just let the higher time frame cycles bother me too much. Like whenever I'm on the 1 minute time frame, yeah, it's nice to look at the true day open and the daily cycle, but I should only just use the micro cycle and the 90-minute cycle, right? That's what I mean. Just focus on what you actually need, right? Then the last thing is I just wrote down my strategy in like a couple of words to make it clear to myself over and over again what I need to look for. It is why markets move. This needs to be the base of my setup. To equilibrium, to fair value gap, to liquidity, or to engineer liquidity. This is why markets move. When I have seen this on the chart, what do we want to do next? Most likely, I search for a point of interest. I search for an SMT. This is needed. I see a displacement or a change in the state of delivery. So just something that indicates that we want to go higher or lower in my favor. Then I align it with a market maker model and with the time, with quarterly theory, right? This is basically my model. There's a lot more to it. I don't have like a simple rule model. I don't like it. I just want to read markets really precise. And I think that requires a lot more than just checking things off. It just really requires a lot of experience and knowing how the markets move and yeah, being precise and stuff. So I hope you maybe learned anything. This is mostly for me, of course. I just write down my thoughts and reflect on the week for myself, but I hope you at least picked up anything from this. If so, I appreciate a like and a subscribe. But yeah, I don't really need it. I'm just reflecting, but it will be nice. So up to next week. Next week is going to be week 20. So we keep going. We never give up. You will never see me skipping a week. I hope so. I will not, I promise. Yeah, let's make next week a good one. Stay disciplined. Stay showing up on the markets. Keep reflecting. Keep building your discipline. Keep building your habits. Be patient. And I wish you good luck next week. We're going to kill it. Let's go. Peace out.